Hello and welcome to August 16th for TLRY, another Doji Zone and still kicking. Here we are. We know we went through this Doji Zone last week and just held pretty good, but it still made no breakout. Now it's going down here and look what we got here. We have another Doji. So if we can get 2 or 3 more Dojis, this will be developed into a nice support and then make the possibility for this to turn around, or we get stopped out. As I said, we already have our contingency plan. We know what we're going to do. If we're stopped out, we'll lose approximately $215 out of the $355 that got into the trade. And then the result will be is it go to my lost leaders list, and we got played in the future as the scanner find opportunity. And then if it turns around, and then we anticipate to get to that 16 to close above the 1605. So here I have my earlier drawings. I'll move them out with anticipation that we're going to get there. We're not out of the game yet. We're still kicking. And that's what's important too. People start seeing this and they start panicking. Look, if you know what your loss might be and you know your exit, then there is no panic. Losing trades will happen. There is nothing guaranteeing that any trade is going to produce winners 100% of the time. And it's been mentioned by many, many gurus, especially in Market Wizards by Jack Swigert. And they said, if someone comes to you and says, I got a winning program that wins 100% of the time, run for the hills. It does not exist 100%. Ed Thorpe, who I just finished listening in himself, his average was 20% per year for 20 years. So let's do the numbers. If someone was invested in Ed's, no, this is the calculation of the behind for the stochastics, which was in part 1 of today's videos. So let's go ahead and clear this up and consider the 72 rule. The 72 rule divided by the percentage and the percentages is 20% per week, or 20% per month, or 20% per year. We're doing per year. So 20% per year, which is the 20 divided into 72. And that means that Ed Thorpe doubled his client's money every 3.6 years on average. So someone investing a lot of money into Ed Thorpe, let's say $10,000, which of course would have been not acceptable. He was a much upscale and high demand hedge fund, but 10,000 every 4 years. We'll round it up to every 4 because ups and downs. So 4 years, 20 years, 10 becomes 20,000. 20,000 becomes 40. 40 becomes 80, and 80 becomes 1.6. And then 4 divides into 25. Oh, sorry, 5 years. So 5th year, it would be $360,000 with just a single investment of $10,000 into his fund, and letting it sit there for 20 years. And you'll work and play, do your life, and then come back when you're 40 years old, if you had the opportunity to invest in this fund, and say, hey, I am now ready to enjoy financial independence, retire early. Okay, with that said, there isn't much more to go on, but to keep on the waiting game in the anticipation that we're going to hold a Doji Zone here, stay away from that 1250. And if we get hit by the 1250, the after plan is this, of course, I said earlier, TLRY will be retired to the loser circle, to the lost leaders list, and then we will then go and look for another high volume non-lost leader to put into its gap. And with that said, we'll conclude today's report for TLRY, another Doji Zone and still kicking. Thank you very much for stopping by and checking it out. Bye-bye.